Hi, welcome to the Market Alert for Wednesday, 27th of September 2023. So the wrath of Khan, Rex Tech, has downbeat Jamie Dimon. That's the head of JP Morgan, batters bonds, bullion and banks. Well, no surprise on the bullion there. And other news, dollar hits a year-to-date peak as stocks and bonds trade heavy ahead of month end. So, yeah, it was certainly a down day for yesterday, that's for sure. Let's just have a look at the economic news that's to be released today. We've only got core durable goods orders month on month at 1:30 p.m. So the market will make its own direction. And that appears to be in a downward trend at the moment. The implied volatility is moving up nicely now. And as I've spoken of many times in the alert, when we get down into these lows, we get corrections. We've seen the first one here. And we had a bit of a minor one here before the market managed to recover. Now you can see the correction in full swing. When we get, or if we get, to 20+% around this area on the implied volatility, then you will see a market that will have bottomed out. But until that point, then there's potential for more downside for these markets. But the volatility certainly supporting the correction at the moment. Okay, let's move on, have a look at the Dow, see where the market traded yesterday and work our way through to the metals as we normally do. So in the Dow yesterday, the market trading down to 33,664. I think it's 664. Let me just double check it because I've got a couple there. It's 33,604, which takes you back to the low over here. And there you can see the market trading to this level and trying to bounce off this overnight. So this low is a very important low. It's not just the low of yesterday, as you can see there, this low here, 335, is it 5? Let me just move forward a bit. 567 is takes you back to these areas over here. So it's very important that the market holds at this low, because if it doesn't, then we can see prices continue to move lower, and that's where the weekly chart comes in. And we're going to be looking at a few of these this morning in different sectors. So let's just bring the Dow in as well. I haven't looked at this yet. So we traded it up there. So let's just put in some fibs. We're already through the first retracement. So the second swing there is measured from there to there. And we're just at 62. You've also got the 50 EMA as well. So the market, despite the fact being down on the overnight, could quite easily bounce because of what you're seeing there in the weekly chart. That said, we've got further downside targets as well that take you back to these sorts of levels over here that we haven't seen for some time. It's going to take us back to May of 2023, this low here, and that's at 32583. And in the German DAX, also moving lower. Can't see to the left of this chart without compressing it, making it look very difficult to read. See, we got some buying pressure there. So let's have a look at the weekly chart. And here too, you'll see that similar picture. We've gone through the 62% retracement. The 50% retracement, and now 62 is just there. We've also got rid of the 50 EMA as well. So we're free to move down to these other target areas over the next few days and weeks. There's the daily chart again, so we're falling off a bit of a cliff there. And in the 30-minute chart, the one thing that I will say with the DAX at the moment, it is incredibly choppy. Despite the fact that it's moving down, it's very, very choppy. It keeps coming back and then moving back down and coming back, which is unusual for a 30-minute chart, because it's usually quite a nice looking chart where you get a nice move down, whereas this is very choppy for at least an hour or two in each of these sideways moves. Makes it very difficult in shorter time frames to hold the actual stops. In the S&P 500, similar to the DAX, so we're down towards the 200 MA, which you can see there in the secondary line, the lower line, then this line. So again, this market trying to hold above the low. Weekly charts, again, you can see we're just at 62, and there's the bigger picture where we're breaking out of this sideways move towards the downside there. So we'll just have to see if this continues. Back to the daily charts. Like I say, that 200 MA is in place there, and you've got the low of yesterday as well, where the markets will be trying to hold if they can. the 30-minute chart. Again, this is what I mean about the 30-minute. Everything remains red, apart from a couple of greens there, then reverted back to red and stayed red, and then had the lower highs, which is what you want to see. So the market struggling at the DP yesterday, came up to this level and then sold off for the remainder of the day. Like I say, yesterday's low is going to be very important for today's trading, as is going to be the close, the DP and the 50 EMA as well. In the FT100, well, it seems very strong, doesn't it, compared to the rest of them at the moment. That said, I've drawn fibs in on the downside from here back down, and then we've got some upside fibs as well from here back up to here on the right. So anything above there is on the upside, they are on the downside, just in case the market doesn't hold. But yesterday, an inside bar for the FT100, so not as volatile or selling off as much as the other markets. There you can see a choppy 30-minute chart as well as the market moved up. Then we had the news, and then the market back down, struggling with the DP there overnight at the moment. In the US dollar, this is a weekly chart of the dollar, and you can just see how strong the dollar is at the moment, making its way back. We've got highs up here of 114 should the market want to continue to move to the upside. Just have a look at the daily chart of this, and there you can see the defined uptrend in the US dollar, and at the moment it looks like, say, based on the weekly chart, it's going to continue that way as well for some time, because it's broken out of this sideways move there as well now on the weekly chart. And in the metals, well, they're going to get hammered, aren't they? As I've said for the last few days, we're going lower. We're going to take out all of these lows to the left as well, and we'll be looking at the weekly chart soon to see how far down it could go. Again, choppy yesterday trying to hold it, but once Dimon had opened his mouth, that was it. It moved lower. And Dimon is the man who is the head of JP Morgan that were fined $900 million for manipulating the price of silver and also gold. Speaking of gold, the market, they're taking out the $1,900 level. That's not good because we're going to go down and test the 1884 level. And in the 30-minute chart, you can see the low has already been taken out as prices continue to move lower there. And in the gold-silver ratio, what a surprise. This is continuing to move to the upside. Like I've said before, we're going back up to the 100 level on this, is once the dollar gets momentum behind it and we take out the resistance to the left there at 86 area, then we continue on up to 92. Okay, that's it for this one. Let's see if the market maintains that volatility that we saw late on in yesterday evening, and some decent moves. So with that, as ever, thanks for watching. See you in the next one.